Let's take the discussion on markets and the factors which are playing on it with Rana Gupta joining us from Manulife all the way from Singapore. Rana, good afternoon. Thank you so much for your time. Now that we have concluded the earnings season as well, what did you make of the quality of earnings and also by far, say, top 200 or top 500 companies, and also the commentary which the companies are guiding for next couple of quarters far ahead? Does it give you kind of confidence that they will support the valuations in the market?
Yes, I think the earnings season that came in was quite good, albeit some of the auto companies, they faced some margin pressures, and some of the banks, particularly the mid and small size lenders, they faced some asset quality issues in unsecured loans and autos, so on and so forth. But rest of the earnings were quite good. And we do think that as the economy opens up, and we do think by end of December quarter, March quarter, things will normalize. And when that happens, we think that the most stressed areas like a transport or let's say rural consumption and the asset quality issues that the small and medium-sized lenders experience, those areas will start bouncing back. So I think that puts the earning construct scenario quite favorably. And like we were discussing the other sectors, the earnings were quite good to begin with. So overall, I think the earning trajectory for this year, as well as going forward to the next year, given the economy is opening up, should be quite robust.
Mm-hmm. Rana, out of the three which you are positive and constructive on, one stands out to me, and that is the manufacturing theme. Both manufacturing feeding to domestic economy and even manufacturing feeding to export market across sectors. What kind of sub-themes are you looking at over there when you say manufacturing? Is it the capital goods space, or is it other spaces which feed to the Western world like garments, apparel, plies or forgings or anything else? How do you look at manufacturing?
So manufacturing is a pretty exciting prospect, and we have been quite constructive on the manufacturing space given the policy reform that has happened. Now, with that backdrop, the opportunities are many. I think we can talk about in a few sub-segments now. For example, we were quite bullish on this electrical and electronics. We continue to remain bullish, but I think those stocks have had a pretty steep and hairy run. We continue to remain bullish on the chemical sector. If you look at the chemicals, all the stocks, all the companies, when they reported numbers, they spoke about how they're gaining market share and how India's market share in terms of chemical exports is increasing. I think that is one area continues to look exciting. And also, from the results, another view was kind of reaffirmed that in terms of auto ancillary or even the light engineering exports, that Indian exporters are doing quite well. And we believe that this trend going forward might even strengthen because, this United States have passed this new infrastructure bill, which according to our view, probably $500 billion of fresh spending, largely on transport, construction, so on and so forth. So that means that the construction machinery, the trucks and all that will be quite high on demand. So we do think that the export scenario for some of the segments that we've spoken about looks quite bright, but by any means, there are opportunities outside this also. But these three we largely focused on.
Mm-hmm. Rana, you also are witnessing a theme which is channelizing of domestic savings and increasing trend there into financial markets. We are also talking to a lot of big companies which are saying that hiring across sectors is on a surge, not only IT, but across sectors. That will actually boost all these domestic savings. Do you see large part of that coming to capital markets or financial assets, and hence that is also a theme worth looking at?
Well, absolutely. I think overweighting the savings institution is one of our key views in India. But let me take a step back and see how we are building up to this construct, and we had shared some views on this before. Whether you look at manufacturing, right? Manufacturing essentially is increasing number of jobs, and it's also reducing countries' dependency on imports and exporting more, right? And we spoke about earlier about the digitalization theme. Digitalization theme, the more the economy becomes more digital, what happens is the productivity of the business increases, and as a result, more formalization also happens. Now, when you put all this together, what does it mean? A better manufacturing resurgence means the country's current account deficit situation becomes under control. Better digitization means higher productivity, and also better formalization means government's tax collection goes up. So that's a fiscal to a fiscal point. So overall, the country's deficit situation improves, and that also means there are more funds available for investment, and savings also gets higher. From that macro construct, I think savings institution playing is should be one of the key ideas. And we do think that when we talk about savings institution, there are multiple options to play it, fortunately. I mean, one can be looking at the banks, and I do think some of these financial savings will also flow through various financial instruments, be it capital market linked instruments or even insurance. So those are the areas where we are bullish, with a very structurally bullish with long-term perspective.
Right. Rana, you represent the FII community acting in the market. And, we saw that FIs on a net basis were kind of underweighted. There were some outflows also. August onward, they've started coming back. What are your thoughts on flows into emerging markets from the FII community? When you talk to your peers around in Singapore, what's their stance on EMs like India? Just to get a sense on a broader stance of EMs from the FI side, taking into account what happened in China in the last couple of weeks and months.
Yeah, sure. That's a very important piece of the puzzle. Now, our view is that U.S. growth is, there is a view that U.S. growth is peaking, which it might. And that's actually a good thing, because even if the growth comes off from its current 6.5%, the growth is going to be quite healthy. So that is good, because the global growth is good. If US were to be too hot, the US would attract all the money and living in emerging markets in a bit of a spot. But that does not seem to be the case. Also, US growing creates the bull case for emerging markets export, and we touched upon that a while ago. Now, coming to emerging markets, in that favorable construct where the global growth is quite good, US is growing at not too hot, not too cold. It creates a quite a favorable outlook for the emerging markets. Now, within emerging markets, because of the China regulation, whatever happened, there were some issues in last month, and there were people had to adjust their views, their positions, and whatnot, and that may have led to the outflows that you're referring to. But within the emerging market, we do think that domestic-oriented stories will be more and more preferred, and particularly if you now apply the COVID backdrop, there are not too many emerging markets where the vaccination outlook is so certain. So therefore, given now that you marry these two, and along with the long-term themes on digitization and manufacturing that we spoke about, we do think that India's case within emerging market looks quite robust.
Rana, one last quick question on the latest numbers for 22-23 have come after the numbers ending of the earnings ending, both for index as well as the broader market universe. How does it appear to you? We are in the middle of a cycle, or do you think we have some upside? We may not run into a big valuation wall so soon looking at the numbers. What's your thought there?
So the bounce rate has been quite sharp from the lows that we have experienced in terms of earning, in terms of recent, or rather past year. So now we are somewhere in our view, we're getting to somewhere the early cycle of those kind of super returns, where year returns are quite strong. Is perhaps that phase is ending. So right now, in our view, we are entering more of a middle kind of growth phase, whereby we do think going forward, as the economy opens up, credit growth is going to pick up, and that will surge of economic activity picks up. So we are entering in that kind of a phase. Now, in this phase, in terms of equity markets, we think that the multiple expansion that we have seen over last 1 year or so, that multiple expansion bit is done. So going forward, one has to be very focused on where the earnings are more sure, where the earnings are going to come from, whether it's an earnings beat or whether it is strong earnings compounding on a year-on-year basis, that depends on the investor's view. But going forward from here, earnings delivery and earnings growth are going to be the key themes.